5 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, the week ahead doesn't look very exciting. What we're going to discuss is how the charts are set up and what's likely to happen next. Let's get into tonight's video. Yeah, I know I changed the format on you folks again. I've been seeing complaints about too long on the intro, so I'll just get into video. You'll have to back it up a little bit if you're just joining late. So a couple things. Last week we did see a pretty interesting week from the standpoint of markets trying to rebound and just kind of move back into the pattern. The weekly charts had a bit of a reversal, but nothing really material there. So what we're looking at right now is a very interesting setup. We're coming into a week with virtually no news. We have some news on real estate, housing starts, existing home sales, stuff like that, typical claims, all that. It is not very exciting. But we always have the White House to depend on for daily commentary. I don't think there's ever been a president that has had the news media sitting in the Oval Office every day. So he's definitely got some transparency. There, you can't tell who's mad and who's not mad anymore, but there's plenty of things going on from the White House. So that may be our source of news this week, because I was just reviewing the reports coming out this week and nothing substantial. I went through all the earnings and they're boring. I think Tesla comes out on Tuesday. I didn't get through all of them. It just looked really kind of boring. We had a lot of the big earnings already out in this cycle. I think there's some more coming. I'll review it a little more, but there's nothing for the next couple of days anyway, other than it looks like Tesla. So there's something I do want to go into tonight and just try to set up, because I think it's kind of interesting. I keep flashing back to Powell's conference at the Chicago Economic Club on, Wednesday. I keep listening. Man, talk about a guy that's got, knows he's out of a job in a year. He'll probably get some nice job out in the private sector and do well where he came from originally, right? But it's definitely, I don't know if he's going to stay on the board, what's going to happen with Powell, but he's definitely out of there. He doesn't like Trump. Trump doesn't like him. It's pretty obvious that there's no love affair going on there. Now, the question is, I think what I want to discuss is they keep, and I put this in the Substack the other night, and I touched on it, so I want to elaborate a little bit. I'm just setting up the screen on the other side, so I'll come up so we can talk about this. But the result of what's going on, bear with me while I'm bringing this up. Yeah, the result of what we see going on is kind of interesting, because Powell's talking about, the dual mandate, all that stuff that we always hear every time he comes on the screen. We have to listen, our dual mandate of, stable prices and employment. And then if you recall, I think it's interesting. If we go back last year, he said, I'm not going to get political or anything, but he lowers the discount rate to by 50 basis points, lowers Fed funds, and then like literally 2 months before the election, and it looked pretty political. You folks have put up with me going on about that for a while, but then all of a sudden, tariffs. He didn't want to talk about anything going on in the government last year. This year, now he's out talking about tariffs and basically saying tariffs are going to be inflationary and all that stuff. Meanwhile, there's a lot of elements that have a lot to do with inflation is down, like crude oil and some other elements out there. But what I want to talk about is the absolute lies. And the Fed I think it should be abolished. I have never been a fan. I'm less of a fan right now. It appears that there's so many things in our government that's just coming to a head that it's just unbelievable or being exposed. But let me bring up this chart here and let's take a look at this. I put this chart into Substack the other day, and what I did was I went back and I wanted to go, the Fed's always talking about this 2% inflation target. I'm like, what is that exactly? Well, I look at the actual numbers. That's why I tell you, when you look at the year over year inflation changes, that's a much different picture. I've told you folks before, whenever I hear somebody talking about, percentage gains and talking in percents, there's an old book out there, How to Lie Through Statistics, that was a Bible back in, I think, the early 50s. I think it was written in 53 or 54. And it's all about sample size and how you use statistics, percentages to actually tell lies. And this is what the Fed's been doing for a long time. So from 1950 to 1973, that was the industrial boom at that stage. And that was hovered between 0 and 3%. And, I've talked to you folks. I think I have the book over here. I had it. I was just looking through it the other day. I moved it, but William McChesney, he was Fed chair from basically during this period, 1950 to 1973, a little bit before. I think Arthur Burns replaced him in 74, 75. You can fact check me on that, but the point is that this was the policy, and it was that 2% number. So they took what Bill did, and they keep that same narrative because it was so successful. And if you go back and study that tenure, it's very interesting. And then we go to 1974 to 2019, which is the stagflation and moderation era. And go back to the 1970s. I was just getting out of college in 1970s and 74. There were gas lines. Some of us older folks remember that, especially here in the U.S. I don't know what it was like anywhere else. But what we're seeing is we saw all this lines and disruption, and this is where oil and all kinds of stories came out. We were going to run out of oil and all that stuff, and now they're pumping more oil than they ever have, and they keep finding more because it's a resource, it's a mineral, it's not a bunch of dead dinosaurs. And they have an awful lot of hydrocarbon fuels on Saturn. Evidently, they had a lot of dinosaurs up there as well. But this whole period of stagflation into 2019, and then we come into what I call the post-pandemic 2021. But here's the numbers. It stayed above 4% for that entire 74 to 19 period. And then when we get it to pandemic, it's at 4, I'm just looking here right now, 4.3. It was 3.9 for all those years. 35, what is that? Almost 35 years, 33 years, something like that. And now here we are at 4.3. And what did they say? Our target of 2%. And I told you folks this before, so I wanted to emphasize this because this is important when we look at this chart here. This is the actual numbers of the consumer. This is CPI. And this is what it looks like, the index itself. And I drew arrows to show that change at those different errors. And you look at this red line down at the bottom. I'll put a cursor on it here. If we look at this red line, that was the 74 period. So I wanted to grab this book. Sorry about that. William McChesney Martin was the chair during all those years. And, so they keep emulating what he did, but that's not what happened. Look at the green line now for 74 on. That's the 4.3. But then it accelerated with all the money that they pumped in. And I saw Powell say something, and I brought this up. I might have brought it up a couple of times. I apologize. I get on these threads and they just kind of keep coming back. And one of the things that comes back to this period of time is that Powell said that, basically there's no way out. We have to have inflation. There's no way to do anything, because if we had deflation, then that's related to the 29 crash and all of that. And so we don't want that, that, so we have to have inflation. So he told us that prices are never going to go down. So as long as the Fed's around, as long as those things are in existence, this system that we've been operating in, this is how it's going to go. Now we bring in Donald Trump, right? Trump is trying to break everything. Like I said, my biggest fear is they break the wrong thing and the whole thing collapses. Now, you're going to get people talking about after 1929 and the 30s, they tried the tariffs, bad timing when the markets were down in the dumps and there was nowhere to go during the Depression, right? So they completely collapsed the market. So that's one of the scenarios that's out there right now. Bear with me a second. So the reason why I keep bringing this up, because I think the Fed, people keep talking about the Fed's going to lower rates this year. I still think there's at least a half a percent down from where we are right now. When it's appropriate, I'll go through the yield curve and talk about some of those things that are on there. But for right now, this is the real picture. This is what's really happening. And I should bring up a chart if I can find it quickly. I'll try to bring up a chart of the year over year. So I'll just talk about it while I'm bringing it up. You don't have to see me fondle around my screen. But this is, I think, really important. Bear with me while I'm bringing this up. This is okay. This will be good enough for right now. It'll give us, it's the core CPI. But when you look at these charts, look how wonderful this downtick that we got looks. The year over year looks really good, right? Everybody's yay, this is good. And this is the illusion that they're creating. This is the lie that they're creating through using statistics, okay? We look at this and it's getting better, absolutely getting better. Then we go back over to my other chart here and we look at this chart and it's just maintaining the trajectory that it's been on. It's not getting better. It's just the same. And this makes me crazy because everybody operates on this. I don't care who it is. This is the big lie, I'm going to call it, because I've mentioned this from time to time. I've never went in on the channel here and went into more depth about this, but this is how they're lying to how they're debasing the U.S. dollar. I mean, I was looking at my wages I made when I was in college and then converting them to current dollars. It's insane. I'm a boomer, so I had the option in the, early 1970s where I could buy a house. I bought a house for $18,900, my first house. On FHA, put $1,200 down. You can't do that kind of stuff now. So, but this is what they've done is they've debased the dollar, and this is how they lie. This is the chart they use to lie and cover, and then this is the chart that is the one that reflects what prices have done. And the bottom of this chart is where I was talking about when I could buy a house like that. And so I feel for all the millennials and everybody after that to try to get and Powell is right in a right way, is that you can't get prices to go now without collapsing the system. And so, and no one wants to go through that again, right? So I don't know what the solutions are here. I'm not, but I just want to, when I was listening to him the other day, I just thought, what a lie this is that they're telling us, how they're deceiving everybody that's wanting to buy in. And hey, us market guys, do we care if the market thinks it's good and we can figure that out and the market, we buy it and the market goes up? That's what we care about, right? But in the real sense of things, this is what's happening to society. They're just completely collapsing it internally. And my hopes, I saw somebody post a really nasty picture of some spraying in the sky, some weather engineering going on. We get it a lot up here in the mountains where I'm at, believe it or not. And it just, when you see all this stuff, it's, my wife looks and goes, where's Doge at? Why aren't they getting rid of that? Who's paying that? So, but this is just more of the deception of everything that we're seeing in the government. So haven't looked at any comments, but I just needed to get that out. Okay. So let's get into talking about the markets as we come into this week a bit. So thanks for listening to that. Please comment in the channel. I'll try to answer everybody. Like everybody should know the rules after all these years, but it's okay to disagree and debate. Just don't call me names. That's the only thing. Yeah, just, I'd love to look at... Yeah, I did say, I'm glad I looked at some of his comments. I was giving them an A+. I gave them an A+ right until they really got political. They had, and I was talking about engineering through the unwinding of and getting interest rates to normalize. And that was the A+ that I gave. You're absolutely right. Thank you for saying that, because the issue that was going on then was I was really impressed how well everything was going. They broke that. And if you notice, if you probably could, I was doing videos back in the day, probably during that time, still pretty consistent on a daily basis like I am right now. And I think that you'll see that when the Fed got political in September and dropped those rates by 50 bips, I remember I said they were going to do nothing. And not only did I said maybe 25, they did 50. And there was no reason based on what was going on in the economy or anything. The only thing that I would argue is that they're trying to get the rates to normalize and get that yield curve shifted. Well, I'll do a yield curve show maybe this week. We'll see what comes on. I think it's going to be a pretty boring week, but it just could be more exciting because we've got the crowd in the White House. And listen, I don't see any reaction to it. I thought I saw a story somewhere that Putin was doing a ceasefire. I don't know if that is out there or not. If anybody knows anything about that, please make a comment if you would. But I just, it's just this deception is big. This week, right now, I'm going to show you some charts. I've been telling you about the PPMs we're showing on the daily. We're going to rocket. I'm going to show you what happens when you get a disruption like we had 10 days ago or so, 11 days ago, whatever it was, in that Wednesday blow up that we had around the tariffs. I'm going to show you what happens to charts and the distortions that can occur in markets and the shocks that come to the markets. And sometimes and I've been talking about it normalizing. We still have, I think, another 4 to 6 weeks of normalization from that standpoint. And we'll go through the stuff. So I'll go through the WaveTech database. This is a plan for the rest of the show. WaveTech database, and then we'll go through all the markets. We'll see how we go. I'm only 19 minutes in, so I didn't know how long I would get going on this. See if this book will come up. Yeah, this is the book, Chairman of the Fed. This is a really good book, by the way. It's on William McChesney Martin Jr., and he was, I believe, from 1951 all the way through 73. I think Arthur Burns came in during that time. I used to say Arthur Burns was the worst Fed chair ever. Janet Yellen wins, hands down. She gets it. Okay. So, all right. So let's go ahead and get into the database. Take a look at what's going on there. I'll start with the daily here. So if you're new to the channel, there's 14,703 symbols in our database. This database has been around since around 1996, 98 is when it first came into play. And but we're looking at one sector long, consumer non-cyclical. It's underwater a little bit, but we got, I'm just going to do these numbers in my head. Got about right at 600 new buys on the daily and about 140 exits. And they're both bullish ratios, a lot more buys than sells. And we've got 16.62% bullish. It's still under the 22 number. We got down to 10.5%, and it has improved a bit. Nothing material here to actually talk about. I'm going to go over to the weekly and bring this up as well. So the weekly is showing us that we're at 18.53%. We saw pretty much just a rotation. There were 180 buys, I'm rounding off, and about 240 buys, 180 sells. So slightly positive to neutral on that rotation. So nothing materially going there. The metrics that we look at on the database, if it gets above 22%, then that starts to suggest that there's a bottoming process going on. I still think this market is very vulnerable with these kind of stats. With the database, there's not a lot of stocks that are trending. What this database is about, it has there's models attached to every 14,703 symbols in the database, and it's not looking for trend setups and trending markets. So not how many stocks are above the 200-day moving average. This is probabilities that these stocks are going to appreciate, and we're looking at, not a lot here. You're looking at almost 2 out of 10. So most stocks are still flat to down, and I think this is a very vulnerable position in this market. And we saw about a 21% drop in the S&P, a little bit more in the NASDAQ. So, you could say the correction period, I'll do air quotes, but there's still a possibility of much more in here. I think there's elements that are still likely to come out of this market that are not fully revealed from a fundamental standpoint. I don't think at the moment, I don't think the current administration, I don't think Trump and company, they care about they don't want to crush the economy, but they don't care if it's soft, and they don't care if the market declines more. They're more interested in the things that they're focused on right now, which is the tariffs and renegotiating things. So that is going to keep, I think, a lot of noise in the markets. And there's always that moment that could just break everything. And I think the whole U.S.-China, as I've promoted before on other videos, is that we're in economic war with China right now. So you're seeing more. And, there's some interesting things going on. It's interesting that Xi Jinping is flying around Asia right now trying to get his allies together on a Boeing jet, on a 747. So even though they don't want Boeing products coming in right now, he's out flying around on his 747. So the irony is never ending. And so I think with the 245% tariffs that we have right now, it's basically an embargo. I mean, they've just blocked the ports. I mean, nobody's going to be pushing anything in or out. So it's going to be necessities only. So basically, is this going to affect the supply chain? Possibly. Remember all the times when we were watching the ports and all that kind of stuff? Maybe we go back and see if the ports are building up again. China's trying to flow products through other countries, which they have done for years. I believe almost 50% of their exports go through other countries that ultimately come here. So, yeah. Anyway, folks, it's gonna stay interesting. But this, what the database is telling us, both on the intermediate and on the daily basis, is it's just telling us this is not a healthy market. And when you're in this kind of mode, it's easy to ratchet down another level. So let's go ahead and get into some of the technicals here. All right, so here's the daily chart on the S&P. And this is that configuration that I told you about, which was that we would see that big volatility. This is that Wednesday that we had on Wednesday the 9th. Get this big volatility blow up. And I said, what we're going to see is a contraction. You're going to have to normalize the markets before they'll be able to go up. So we're normalized. We have some live downward Fibonacci targets right now. 51.86, 49. These are the same ones that have been around since early April 2nd. These were issued. And 49.28, 47.73. So, but this is where I want to show you where these distortions show up. And it's happening on the shorter. If you look here at where my cursor is, you see this big ramp up. Matter of fact, we're in trend mode at 0.38 right now on PPM1 on a daily. So you're thinking, wait, markets should go up. And meanwhile, we're down 27 handles right now. And yeah, minus 27.25 at the moment. And the PPM looks like it's going to stay until Wednesday, oddly enough, 2 weeks after the event. And I've talked to you folks about this before. Momentum, a lot of times, especially, maybe we could, I don't even know what the other indicators, but maybe you can put RSI. All of this is what I call an echo from that big volatility event. So you get the volatility event, you've got to normalize it. It takes minimum on a daily, 5 days, maybe as many as 8 if things normalize fairly quickly. That's what we've got right now. We're seeing this very narrow range compared to the big blow up range, and that bubble has contracted. This is actually to about what it was before. If we go back where my cursor is over here, this is the normal volatility range that is going. Then we get this blow up, then you would get the multiple days, and now we're back into somewhat of a normal range. And unfortunately, I don't have my time of sales up. I should have my level 2 up. I haven't looked at it yet today, actually. But the patterns that we're seeing here is we're going to, this Wednesday, that momentum's going to collapse again on the short term. But this was the element that I kept telling you folks to watch. And this is the one that has actually played out as I thought it would, but now it's been validated, is if we go back, I was talking about, well, we're seeing this increase coming in the PPM1, which says momentum is increasing, but it's really has everything to do with this inverse of this volatility, so this contraction. So it doesn't take much movement on the upside to start to give the illusion of momentum building here. but it looks like in a couple of days, it's just fallen off. And in fact, it's huge increase relative on the ppm. Let me just see where the value was. The value was, bear with me 1 second while I get this value. So just 2 days ago, we were at ppm. ppm1 was minus 0.53, and then on Friday it jumped up and it was at minus 0.17, and now we're at a plus 0.38. Okay, so I've also run the data sheet as well. I'll show you in a minute on this, and just know I'll rerun this later tonight when I do the Substack. This data sheet is very data dependent from the standpoint of when I take the snapshot, what kind of numbers you're going to get. Some numbers don't change, some do. So let's just bring that up real quick. So it's still showing 60% bearish for today, and that's primary. If you were to go through this sheet, you'll see here's what I was just talking about. ppm2 minus 0.36, but ppm1 is a plus 0.36. 35, almost 36, and in this verbiage right here, it's telling you that there's a big divergence, right? So there's two divergences detected. The trend transition, which I'm highlighting right now, the cycle position is we're in trend transition. So we went from kind of a modern uptrend, a big downtrend to a flattening consolidation. Now we're trying to figure out, this is what I was telling you, we're trying to figure out what direction are we going to go next. And so and I think this is what I'm going to try to unpack for you tonight. Okay, so we go back to the chart here, and it looks like the ppm2, this is on this declining. Let me bring this up so you can see it. This red line coming through right here where that is the 21 days, just simple 21-day moving average going down. That is your primary trend right now, and that's going to be your resistance. And if you look at all of the highs, we stayed underneath that bar. Even though the 10 was declining through this pattern, we were kind of waffling on either side of that. And now we're coming in, we still have these downward projections here. And you can see the red dot, this is a projection on a daily close for a 1-day close. It's basically telling you that the 10 is going to roll over and we're probably going to stay underneath this trend. So what we could get here is what I would call a full retracement, where we would get, I'll get this in the Substack tonight, but where we're going to retrace from the lows that we had over here at 49.77. We got a high of 52.88, I think. Hang on, let me get that actual value here. The high was 55.28. And so then we've not been able, and I've been talking about this in Substack, and I think in the last several videos, is we can't get over that Wednesday, Thursday recovery high. And there were a lot of folks saying, oh, we missed it, that was it. No, it wasn't. And that's what I was telling you. So I'm going to show you one more chart here, and everything I'm showing you on the S&P right now will apply to the NASDAQ. I'll bring it up just to bring in the context, but these same formations are on both of these charts. And as I said, these two indices are cousins of each other. They have a lot of common stock, especially in the top end of the weighting of the index. So the potential here is that we're going to start to form or continue the downtrend off of this 21. Let me draw in a couple possible patterns here, so we'll get through this. So what I'm talking about, we get this, let me get a little fatter line. So we get this move down, and then this is what we're trying to figure out right now. Are we going to get the classic cup and handle right shoulder off of this, and it's going to rocket up in a pattern like this. At the moment, I do not think this is the configuration. And I have, it's a GAN rule, but I'll put it out there for you folks, is if we decline from these values here, I'll get this into Substack tonight so you'll have it. So if you don't have the Substack, it's kendallreport.substack.com. $8 a month. There's a 7-day trial, and you can buy an annual for $80, which I think is $6.50 a month roughly. But this is going to be the determination point, and I think we're going to find this out this week. We've got no news really to rock the markets either way, so the markets are going to be operating on what the market sentiment that's out there, and I don't think market sentiment is that good right now. I don't think there's a lot of optimism in the markets as long as there's everything that's going on. I saw a video, I think it was real, you don't know anymore, that the Japanese were basically calling Trump names and everything, and they're not going to do any deal. I don't know, maybe that's the case. They don't, it's going to be interesting how this plays out. But this point I'm talking about on this chart here is the key point. It's probably going to be Wednesday or Thursday, and I'll bring up the indicators here in a minute. But if we break through this, I'm guessing this is probably about 66. If we break through this, then what that tells us is that we will retest that low. So markets will come down and retest it. And there's a possibility, I'm going to remove some, you know what, I'm going to leave these lines. I'm just going to change the color, make it a little fatter. So I guess the alternative to this would be that we're getting a swing like this, where the green line is. I think this is more probable than a bottoming at this level. I don't see any reason for it to bottom. Those of you who've been on the channel for a while, you know that really what my expectations are is for a third quarter weakness and actual output GDP, as well as the in fourth quarter and maybe into Q1 of 26. We'll see how it plays out. But I think this green line represents more of the likely scenario. I'm just going to tie everything I've been telling you, going back to the database. Database is weak. We have very few participants. We're well under any trend metrics that happen. I've been through a lot of these cycles, folks. So just know that that's the case. So I've been through a lot of these cycles. So what we should see, we may get, let me back this up a little bit. We may be able to call something like this. I'm getting pretty dramatic here. That would be the green line would be the potential pattern here. I know, yeah, this is a pretty negative pattern. I don't see anything positive out there. You guys can correct me. I always get to people telling me we're going to be at new highs in 3 weeks. Not going to happen. I think this pattern will play out. I think there's a lot of questions in the markets and all that. And yeah, so we'll just see. I tell you folks all the time that you do a lot of good analysis by asking the right questions. So I'm going to do a quick advertisement. I'm breaking a rule of one of my old IT guys that you say never sell something you don't have, but I do have something. So bear with me 1 second. I'm going to bring something up on the other screen. So this is my book I'm writing right now, okay? Right now, there's 21 chapters. There's only 43,000 words in this book. But this is why I bring this up, because it's about asking questions, basically questions that lead you to a trading mastery. And this is what I've been telling you. And I am super excited. This is what I was up doing the other day. But this is where what I spent an awful lot of time on. I've been working on late at night. I got to bed at 4 a.m. last night. I got so deep in I couldn't get out. I'm anxious to get this to you. It could be trade setups, probabilities, all about my entire. This is basically, I'm writing a book on everything I've done, including the indicators, how they were developed, process, all that stuff. So I'm hoping that I'm a couple months out. Like I said, right now I think there's 100, what does it say? 121 pages on this right now. So I'm excited. I'm excited to ultimately get this out on the street. I got it up there and I can't get rid of it. Okay. So there will be, someone's asking, there's going to be a section on wave tech and Elliott wave. So it won't be, and there will be some basic Elliott in there. There's lots of folks, my old buddy, Steve Nissan. I was working at Merrill Lynch with Steve Nissan when he was writing the Candlestick book, but I think Elliott wave, Reed Prechter's book, that's all. And I referenced the book already in there, because there's the way that just real quick, since I brought it up, the book is, the first 3 chapters are about my journey and why and how everything happened and setting me up on the path. The balance of all the chapters are about process, everything from psychology to everything that I can just throw at this thing. And it's pretty intense. I've got chapter 3 fully done. I have all the other chapters all roughed out, laid out on what's going to go in each one. There's a lot of modifications, so I'm just walking through. So I'm trying to get at least 4 or 5 chapters done per week. We'll see. Okay. So, but I'm back here on the internet, so that's good. This book is going to supplement our indicators so good. It's a lot of stuff I've been wanting to get out. And anyway, it's coming. I'm super excited about it. I've got 2 more chapters to go, and I am going to be looking for some folks to be beta readers. So I'll probably go to our Discord on that. There's a couple of friendly folks in there that I know fairly well, that I've got to know over the years. So we'll definitely be talking about a lot of that stuff. So let's get back into markets here. But the scenario that I'm painting for you here is not a pretty one. I don't think it gets very pretty anytime soon. There's absolutely no reason for a rally in the stock market right now. Zero. Maybe if the war in Ukraine was over, that's not even going to do it. There's just nothing out there. There's nothing. There's no excitement. And the only reason why the markets were going up, especially in the last couple of years of the Biden administration, is they were pumping it, man. They were putting fictitious numbers on everything. I'd be willing to bet that every economic number we saw in the last 2 years was BS. We know the employment numbers were. The Fed was playing in. They were flooding the borders with bodies, and they were pumping those numbers in to keep the employment. And I talked about that over the last couple of years, is that the immigration was most of the reason why everything's going. And some of you, rightfully so, were telling me, Bob, the economy's not that good. And I go, I get that. But the reality is we trade off these numbers. Until market participants aren't trading off the numbers, then we've got to look at the numbers. Anyway, so I don't want to get too far down that trail. Yeah, Green Garden, I don't know why you should know all that. I guess maybe, yeah, WaveTech has got awful lot of stuff out there. I think we figured out there's 22 hours of instructional videos on the YouTube channel. So there's a lot. Okay, so let's go and look at the NASDAQ real quick. Same, this is the daily pattern. Let me bring up the indicators here. You're getting that same echo that I talked about. All those things I was talking about is what you're getting there. So this is key to understand. And the only thing different here on the NASDAQ I find interesting is, and you can almost see it, this 40 period moving average that's coming down where my cursor is starting to roll up. And you can see the forecast in the PPM3 is showing that it's going to start to get better. My cursor here at the top of this prediction is still a negative or a declining moving average. So these things are measuring the angle of attack of each of these. And it's fascinating that the PPM1 has blown up like it has. It's at 0.49. It's going to stay there for 2 days. It's forecasted to collapse back in. And like I said, this is that echo off of that Wednesday spike that we got 2 weeks ago. This Wednesday will be 2 weeks. And so then things are back to zeroing out and going from there. I still think these Fibonacci targets are going to be key. And, we still have 3 fibs on the NASDAQ as well. So I'll make sure I get all this stuff written up real well in the Substack, kendallreport.substack.com. Get that, because that's where all the micro stuff comes out, and I'll spell this out the best I can in that. Yeah, that's interesting. I think that probably, somebody's asking about the sheet, so let me bring that back up. Yeah, it's, so the green support means that's where it should port. Otherwise, it's a positive, and resistance is red. So when it gets pushing up at the resistance into the red, down into the green where the support is, if that makes sense. Hopefully it does. All right, so let's, we are, 48 through, so we got pretty in-depth in that stuff. So let's take a look real quick. Let's go to, take a look at the 10-year. 10 years kind of got that same response. Remember, we spiked up all the way to 458. I put that magic pivot number at 472 out there. I'm glad we rejected around this 458. We never challenged that number, because if we go through 472, that's a disastrous scenario. I was not predicting that we will, but that was the critical breaking point to watch. So I'm glad we rejected. We're back into support. I think we continue to stay 395, 4.25, 435 tops, and we just start to grind out here again. And like I said, possibly this week, if it's as quiet as I think it's going to be, maybe one night I'll go in depth on the yield curve and talk about some of the things that are going on there. Okay. But yeah, so I just want to bring this up real quick from a reference standpoint. I've been covering gold. I've been putting gold fact sheets in the reports every night. We're continuing to see gold up $40 again. You know, let me just bring the scaling in. We are probably maybe one more day to a peak, and then looks like we go sideways into these moving averages. But we're now hitting, if I bring this up, we've got three new fib targets: 34.27, 34.64, and 35.40 is the numbers that is above us here. And I showed you this before. Gold's just in this runaway. There's no way. It's just running big time, and so it looks like the forecast is running all the way into mid-May. Let's put a weekly chart up. I mean, talk about a ballistic market. So the volatility has gotten so big here. Let me just address this, the range for the week. Yeah, so we're look at this wide range here. 30 over on the far side of the screen where my cursor is. The range 3,100 to 3,540. We're trading right now at 33.80. R1 33.90, and then 34.45 is R2, and that's for a weekly level. If we look at the indicators, we still have multiple weeks of strength still coming here on gold. So gold's going to keep the grind. It's going. It's kind of tough to trade up here. I don't really see trading opportunities, although we should see a little mini peak on Tuesday and then maybe some pullback. But on a weekly basis, this thing's it's intense from that standpoint. All right, I'll cover Bitcoin and I'll come up for some final comments. I'm going to go to daily because this daily chart on Bitcoin is amazing how the volatility has just completely crunched down. And I've been talking about this moment for probably 2 weeks, is that everything's going to narrow down to a decision point. And we'll take a quick look at things to see if we can figure it out. The weekly charts have a bit more of a configuration to go. And but you can see on the daily, we're seeing momentum just about to roll over. So the indicators, the PPM1 is suggesting we're going to break through the bottom end of this range, start to come out to the downside. Like I said, I have trouble getting very bullish on Bitcoin. I still think the ETFs and options and all the derivatives around this market have just ruined it. Maybe we'll see. Maybe I'll be wrong. Maybe there'll be some event that happens that is tied to Bitcoin that will break it out of this. But for right now, like I've been saying, is the bad guys are all involved, all the market makers and all those. So let's go into the take a quick look at this pattern here. This is what I've been talking. We're breaking above that 10-period moving average. So I think we continue to move above. This is a weekly chart. A 40-week moving average is going to be your primary, what I call demand line. Anytime you see any prices near that, you want to be a buyer. And now we're getting above the 10. We could run as high as 91, 92,000 here. So the range looks like it's going to go up. The downside that we're seeing on the daily is really just pulling it back down toward this 40. The 40-period moving average right now is 81, and we're trading last trade 86. So we're still within the confines of these larger trends and should be tradable, but it doesn't look. Let me bring up this. Yeah, so this is the contrast, and you'll see this. Daily charts down right now, 3 or 4 or 5 days down, tell you you're pulling back towards the 40-week. You still have, even though we're trading above the 10-week, there's still some resistance because it's still negative. So it wants to come back, the market wants to come back underneath that value. Ultimately, I think we get to the 21-week moving average. And at that point will be a decision point to see what's being forecast and see what's going on in the planet to determine whether we're going to get a breakout or not. But for now, some pretty good trading going on there from the ranges that have been well established. Okay, got about 5 minutes to go. So let me look at a couple comments that you have here. Yeah, I'm not sure. I just see a comment, his latest post now target cheating. Yeah, tariff cheating, export cheating, that's the name of the game. I knew somebody once upon a time that was in the import-export business, and they were telling how they understate invoices, all kinds of stuff to get products in certain markets. Sometimes if they want a launder market, they overstate them. I know some folks that were overstating like 10 and 20 times the value of the commodity they were selling, so they could get they were buying them from somebody that was known, and they were overpaying so they could move money out of their country. I've seen this. This goes way back into the 80s. But I've seen all of this stuff happen. So yeah, there's just anytime you get these tariffs, 245% China just opens up the possibilities for cheating and beating the system, right? And there's a lot of smart people with AI and everything else. There's a lot of little crevices to get through to make some money. Just reading comments here, folks. I appreciate it, David Ford, for 2 likes. You know what? I want to look at something real quick here. Let me see if I can bring up something fairly quick. It's not going to work. That's right. Let me just try something. Bear with me a second. If it comes up quickly, then... Yeah, of course it's not letting me in. For me to show this, I have to remote into into a PC because it doesn't run on a Mac. So anyway, I'll get it set up and I'll show you. But what I was going to show you is the miners. And somebody was asking about silver, and yeah, I'm just looking. Silver is just always a laggard. There's so many. It's one of those markets. It's almost like Bitcoin. There's been so many conspiracy and the whole Morgan Stanley, all the stuff that goes on. I've heard the stories. They never materialize. In fact, you got gold in just this vertical parabolic, and this thing's chopping around in the same range it's been for, all year. Can't break out. There's no trends. I'm looking at a weekly chart. So I'll make those comments quickly. Yeah, it's good luck getting Boeing to repair parts for China. That's that's a great comment, because I was talking about that earlier. Is that, that that 747, these planes need a lot of maintenance all the time to keep them squeaky clean, especially if you're putting the president of a country or the dictator, or you put Xi Jinping on that plane. He doesn't want to fly in on any Chinese planes, that's for sure. Pretty obvious. Anyway, yeah, that's definitely a thing. Yeah, so I'm just looking at. Listen, I reconfigured my workstation, and that I've actually acclimated to. I went from PC, from decades of being PC. I still have PCs in my life, to Mac, and it's been a painful experience. And I re-experienced a lot of pain in the last couple of days. I added a vertical monitor for some of the programming and stuff I'm doing, and you'd think adding a monitor would be easy. It sucked down a lot of time because of alignment and all that. So I've got my workflow down on the Mac pretty good, but it still presents challenges all the time. Anyway, so folks, I appreciate everybody watching as always. The data sheets are going to get, I need about 5 hours, I'm guessing, 5-6 hours to complete this package, and I'll be able to get this TSX file out. I'm going to probably start another little mini newsletter for this that will have updates, and I'll be able to put new files out there and get it to people that have subscribed to that. So there's a couple little things need to be done. Once that's done, it's going to be magic. So yeah, I was just looking. Somebody says try the plugins for Mac screens. I was just looking at that as an option, because I know there's a couple little $7 products. But I got it all fixed now. I had to recable. That was part of the issue anyway. Appreciate the comment. Yeah, so happy Easter to everybody that's appropriate. I appreciate it. I will be back tomorrow night, same time, and we'll keep this going. We'll see how this goes. It seems to be working right now. Just make sure you hit the like button. I feel like I should get 1,000 likes. I'm getting 5,000 to 7,000 views. Should get 1,000. One out of 5. Give me a like before you leave. Appreciate it. It does matter, by the way, to these algorithms. I appreciate it. We got a fair amount of new subscribers as well, so thanks for hanging out, and I'll keep trying to keep things interesting. Talk to you soon. Have a great day, everyone.